Hey guys, how are you? Vladimir Rybakov here from Traders Academy Club, and welcome to the Weekly Forex Forecast and Market Analysis. This video is for the week of 28th of June to 3rd of July 2020. So first of all, I would like to wish you a very happy summer. Enjoy the sun, enjoy the weather, stay safe, be well, and my best wishes to you and your in this challenging reality to everyone. So I hope everything will be well for you and yours. I would also like to, in advance, to wish to all my Canadian followers a happy Canada Day coming this week. Enjoy, have fun as much as possible and allow to us here in Canada. And I wish you the best for this day. If you are watching this channel for the first time, I would like to take a moment and to welcome you to our fantastic community, and I would like to invite you to subscribe to the channel. Just follow this subscribe button below this video, and please remember to enable the ring notifications so you are notified when I upload a new video for you during the week. As well, I would like to invite you to join our trading club, the Traders Academy Club. You can find the link to that below this video in the description or in the comment section inside the first pinned comment. As well, I would like to invite you to join our free Telegram channel where you can enjoy from trading ideas, articles, videos and more that we publish during the week, free for the community. On Monday, as every Monday, we publish our text version to the forecast. So you can come to the blog, vladimirrybakov.com, and this post would be available for you on Monday. You can also come back to the video, and this link will be published on Monday as well. The text version allows you to basically refer to the ideas discussed in this video and as a reminder of the moves expected. So I want quickly to review this the last week of the things we discussed, and then start to prepare the coming week analysis. And for this week I have several very interesting instruments. I have the Euro Pound, EURCAD, KiwiCAD, Gold, S&P and Apple. So let's quickly go and review first of all the previous week. The first idea we were looking for is the euro dollar, where we were looking to trade the triple cycle from the weekly, where we expected the daily to create the 4 hours, to create the two waves and continuation. We were looking for this zone to hold and to start the reversal from this area. The best setup was by breaking this trend line. So the euro dollar, as we can see, let's go back here, broke the trend line, started the rally, and now returned to the same area. So the biggest question is what will happen next? Personally, I still not confident that the bullish run is over. I might be wrong, but the way I see that is that this is just developing deeper to waves, and once it hits the next bullish hidden divergence, the euro dollar should go and try to continue higher. Of course, we will see how it develops, and once the time comes, we will discuss about it. Aussie franc, let's scroll back from the analysis to the setup. We were looking to see the trading correction, and after the correction completed, to see the rallies. So with this pair, not much happened during the week. We got the correction, we got the continuation down. It was kind of lazy move by the market here. So my view basically remains the same. Once this correction is over, which currently looks like developing into waves, I expect to see the continuation further until we will create a big massive divergence. So these dips, once they reached and complete the correction, from my point of view, should develop a buy opportunity. Aussie CAD, we were looking to see one of the two scenarios. The first scenario is the break below the range and then sell the rallies. And the second scenario, if the range holds, then one more high before a sell take place. The range is not broken. We're holding the range. No break below, no close below, no lower lows that we can go and trade the seller retraces. So the plan stands still. We expect to see this new high to complete this divergence and then looking for the sells. Again, I'm quickly reviewing the previous week. As you can see, some of the pairs move, some not, some become relevant, and others have to be simply updated. For swing trading, it's very important to have this follow-up of the plan always. Sugar, the idea is a triangle and the breakout, or deep correction of the ABCD and then the rally. So as we can see on the sugar, we have no breakout above the triangle. Instead of that, it's making the correction, and it looks good, and my view remains the same. I expect this correction to complete a bullish hidden divergence, and once it does, we can see we have very strong supportives on here, and once it does, I expect the sugar to make a rally up. I definitely like the way it develops, and I would expect it to offer this continuation further. So the best thing is, once the bullish hidden divergence completes, go to lower time frames and start to see here. Let's say this is the place it completes, and start to see here attempt to create the bullish trend, which means higher highs, higher lows. So nothing really was traded on the sugar this week. So again, quick overview. Euro dollar moved, started move good, then moved back. The plan just go a bit deeper. Currently nothing clear. Aussie CAD aiming for the new high. Aussie franc moving according to the plan, and sugar not yet in play. S&P, where we trade the correction of this triple cycle, and I was talking about the 3 waves and 2 waves down with the breakout. And S&P is also, well, I'll cover that also this week, but so far so good, and we have a nice move here. As you can see, the double top is holding, the divergence is in play, and it was a very nice movement on this one. I will explain further what I expect with that. Just wanted to review the previous week. And Bitcoin, also we expect ABCD correction and the triangle or ABCD on the 4-hour chart, and as well the Bitcoin, where is my Bitcoin here, is moving nice, made the 2 waves, made a breakout, moving nicely, and I expect the same scenario as we discussed in the previous week, this corrective cycle to develop and complete. So my view remains on. So that's from the previous week, and now let's go again. As I said, on Monday I will publish the sorry, the words confused in my brain. I will publish the text version to the forecast, and we will start it now. And the first one is the Euro Pound, and the way I see this one, it's preparing the top, which should be somewhere here before the next move down develops, and 2 levels where we will mainly need to pay attention to: the 61.8 of this expansion, which is currently in play, and slightly higher around 0.92 of the 100. The divergence is following there as a potential divergence on the daily. We take it through the 4-hour, there is also developing divergence. So the best from my point of view would be the daily trend line breakout, and mainly on the lower time frame I want to see it start and develop bearish signs, meaning we have one false break. Let's assume This could be second false break, so we would want to see convergence. Okay, bearish convergence. And the alternative is, after the climb, we start to create trending structure. Which trending structure? Bearish trending structure, making lower highs, lower lows. Why is that important? Because assume this is a bearish trend starting, we want to see the bears gaining momentum. How do the bears gain momentum? By making the lower highs and the lower lows. So it's very important to pay attention to these little details, because look, it tried during the week, but it was only 2 lower highs, lower lows. So that's not a bearish trend definition. It's a correction before we try and create new high. So that's my view for the euro pound, approaching to critical zones. We can also see fantastic pivots areas here. And that's the zones I would be looking for the reversals to start and develop and happen. And I believe the next several weeks should be very interesting to follow the euro pound. My next one on the list is the euro versus the CAD. What do they do here? EURCAD. And here is what I see here. From the longer view, on this uptrend, we didn't complete the bearish divergence after the rally. A bullish hidden divergence is still the last divergence that is in play. The weekly chart created a massive rally, then a drop. This drop, as you can see, was dancing for a while until it managed to create the bullish hidden divergence. After this massive leg to the upside. On a daily time frame, we are holding here a very strong supportive area right on the psychological level of 150, making the bullish divergence on the bottom, and mainly we start to create the highs going up and the lows going up, and the 4-hour chart also joins the party and make here an attempt to create a higher highs, higher low structure. So currently it is ending with this potential divergence, which makes me personally think that we should face some corrections before the continuation upside. And from my point of view, as long as we hold this rising structure of higher highs and higher lows going to the upside, I would be expecting the pair to continue higher with the corrections. So from my point of view, EURCAD is definitely an interesting one to follow. And the next one is the Kiwi CAD, which I also anticipate to reach the very strong zone here. Let me show you. When we plot these waves together, we have a massive zone here, very strong. And even on the inner leg, you can see here the 161. So this one becomes a very strong zone. Now, as you can see, we have several clearance zones coming from the previous downtrend, and the psychological 090 isn't far from this zone. So the way I see the Kiwi CAD, we should see the pair heading towards this zone to complete this divergence, and from there I expect a slowdown of this movement and a correction. Also, if we take a look on the pivot zones, look at the very strong area we start to see here and slightly higher next to the 090. So once again, I do expect the pair to go reach the zone, slow down, complete the divergences, the daily and the 4-hour, and then I expect a good correction to start and build up. That's my view for the Kiwi CAD, which from my point of view, again, on the next weeks would be a one that worth to follow. Now I want to talk about the gold, which I find very, very interesting. And here is why. We are next to the all-time highs. very, very close to that. Who would believe, right? So how quick all that can happen. And RSI is coming to overbought area. The way it starts to form on the lower time frame hints that we might see some fighter. So the sooner we come to this area, the stronger the pressure would be. A divergence is developing there as well, and I believe this is the one to follow. So what I want to see on the gold, the daily divergence come in play, the 4-hour chart to complete it's to complete its own cycle here. Completed this cycle with the divergence. So daily divergence to be followed with the 4-hour. We can put the Fibos there and you will see the beautiful levels right here. Strong zone, as you can see, 2 zones in play. One next one is slightly higher. That's where it all should be blocked. Now, where exactly, it's impossible to put the finger on the level. We need to follow up. We need to pay attention where the false breakout happens. And it might be 1 or 2 false breakout. Then we are looking the convergence, the most recent trend line to be broken. And this should be a good sign of a bearish move to begin. So that's my view on the gold, and I also find it very, very, very interesting. Now, also very interesting fact on the gold, when we check the statistical highs and lows, we see how powerful, first of all, these days are, but mainly look at what starts to happen next. Okay, 1, 7, 4, and 4. These are the very powerful days that around these days tops tend to be created historically. And that's where I suspect we should be able and see some good signs and action. So from my point of view, gold also starts to be interesting. And S&P, I promised I'll get back to that, right? So the S&P follows good. And we are still in the corrective mode. My view did not change. This is a triple cycle. Bearish divergence is in play. Well, of course, to here. Bearish divergence is in play, and I expect a correction. Very good hold after this level been cleaned. False breakout came in play. We got the rally, was blocked on the top with the divergence on the lower time frame. Recreated here trending structure, holding this zone, making a divergence, trend line broken, and we are heading lower. So the best part of what I like here is this. It starts to create the lower highs, lower lows, which from my point of view hints for continuation until this legs complete. The only thing we do need to pay attention to is in trending structures, we cannot accept the price to go straight move above 61.8. Why? In trending structures, we are good with corrective phases, which could be ABCD or a range. So this is the only warning sign I will be paying attention to. If happens, to pay attention to and act accordingly, make a decision accordingly, go neutral. We can't force the market to follow our lines, but I definitely like the way it develops, and I think it could be a good, interesting beginning. Also, I do love the weekly candle pattern here with this massive dark cloud, and who knows, it might be the beginning of something big. It's too early to judge if it is or not, of course, but it might be interesting. It might be very interesting to follow. And the last one for today is Apple, which I also find super interesting on the lower time frame, like daily and the 4-hour chart combination. We have this ending structure coming in play, and also divergence on the RSI. Bollinger Bands, 20 candles ride on the upper band. Last time it happened was here. Well, it was twice. One time with small correction and the second time with bigger correction. Then we had one on the bottom, and we all remember what happened since, right? All-time highs. So I would expect to see some good pullback from here. And why is that so? Look at this beautiful candle pattern. Gapping down. Then this red candle gives the verification, the close below the red candle low, the first red candle, with the divergence coming in play, with all-time high. And with the weekly, look at this beautiful spider. See that? False breakout above this trend line. Looks very good. Weekly did not tick a divergence. But here are the fundamental things behind. Apple closed some location stores, some stores on the different locations. With the new pressure coming in the market, at least the way it starts to look like, it could be a very interesting opportunity to enjoy from some good corrections. Will that correction develop into massive move down or not? Only time will tell. But as for now, due to the level we hold, I think it could be a very interesting opportunity. So my personal view here on Apple is correction expected. Let me know, what do you think about the instruments I shared with you in this video? Are there any other interesting instruments on your list? What do you prefer to trade this week, and why? Please share with other followers and those who watch this video inside the comment section. And for more trading ideas that we discuss on daily basis, we always back up with fully detailed trading report, I invite you to join our club, the Traders Academy Club, and the links to that could be found below this video in the description or in the pinned comment. So thank you very much for your time watching this video. I hope you find the ideas interesting to follow, and I wish you stay safe, be well, happy Canada Day to all the Canadian friends watching this video, and I'll see you, of course, during the week in the live market analysis that we do in the academy. I created this video now on Friday night because I would not be available to do that during this weekend on this week. So I hope it's fine for you. It gives you more time to watch and prepare your week. So once again, thank you very much for your time. Stay safe, be well, and I'll see you soon with more content, ideas, and market analysis. Bye for now.